Hey guys, Jack Gleason with Startup Trading, and in this video I'm going to cover all major US dollar based currency pairs and their related futures contracts. Now, for me personally, I will do my charting on the actual FX pair, but I will trade the futures contract. The reason I chart on the FX pair, like in this case, we have Euro USD is the pair and 6E is the futures contract. The pair is the more accurate technical indicator. The futures contract can be missing some quotes because of times it's shut down where the FX pair is not. Also, the FX pair technically has more volume, so it's important to follow the FX pair. Now, if you're new to Forex and you're new to futures, I'm going to do a little bit of an explanation here on the what really is a Forex pair. So a Forex pair or a currency pair is the price quote of an exchange rate for two different currencies traded in the Forex market. So in this case, we have the euro dollar versus the US dollar. Whichever one is quoted first is called the base currency. Okay, so the euro USD, the euro is the base currency for this specific example. Now, the second currency is the currency that is quoted or sold. So if I were to buy Euro USD, that would mean I am buying the euro and selling the US dollar. So if I were to place an order to go long, to bet on a price increase, I am buying the euro and selling the dollar. Now, if I were to go about selling the Euro USD, I would be technically selling the euro and buying the dollar. Okay, so that's how Forex works. If I short, which means a bet to go down, I am selling the euro and buying the dollar. So when the Euro USD goes lower, the dollar is getting stronger, and when the Euro USD goes higher, the dollar is getting weaker. Now, what I'm going to do is I'm going to back out and show you this is the Euro USD on the left, and on the right is the 6E, which is the underlying futures contract. Now, these charts are going to be pretty similar in their moves. Okay, they're going to be pretty similar in their moves. There is going to be a little bit of a difference in the price, but both of these charts represent an hourly time frame. So on the left side of my screen, you can see that it looks exactly like on my right side of the screen. Now, the futures market does have tax advantages. So that is the benefit of trading the futures contract over actually trading the Forex pair, because it's the same chart with lower tax implications when you trade the future. So this is the euro and this is the 6E. I'm going to go through all of the major pairs and show you guys how to go about this. We're going to go into the Great Britain pound USD. The Great Britain pound is obviously the instrument or the dollar of the Great Britain, right? So, you guys have probably heard of the UK before, London, yada yada. That is what we have here on the left-hand side of my screen. I'm going to make both of these charts the same time frame. This should say 6B. And we'll explain exactly. Sorry, I got a bunch of drawings on my chart. So the Great Britain pound USD, the Great Britain pound is the base pair. Okay, if you are buying the Great Britain pound and selling the US dollar, you would be anticipating a move up. If you are selling the Great Britain pound and buying the US dollar, you're looking for a move down. So Great Britain pound strength would lead to a price increase on this chart, and Great Britain pound weakness versus the dollar leads to a decrease. And you can see 6B on the right hand side of my screen is the futures contract. So we have the Forex pair, Great Britain pound USD, and 6B is the futures contract. Once again, I will do my charting on the Forex pair, but my trading on the futures pair. Okay, we'll move on to our next pair here. AUD USD, this is the Aussie dollar versus the 6A. And you can see the dollar, there's an incredible currency trend going on right now where the dollar is getting stronger relative to all of the currencies of the world, which is pretty incredible. So the AUD is the base pair in the AUD USD. So when the AUD USD is going lower, that means the Australian dollar versus the US dollar is getting weaker. The 6A is the corresponding futures symbol for the AUD USD. So you can see these charts are going to be very similar. Once again, I will do my charting on the AUD USD, but my trading on the 6A. Okay, so now I'm going to show you guys something a little different where the base pair is going to go into being the US dollar. So before in all of our quotes we had Euro USD, Great Britain Pound USD, AUD USD. What's similar about all three of those Forex pairs is the USD is not the base pair. I'm going to show you three different currencies now that are traded on the Forex exchange as the USD being the base pair, meaning these charts are going to be and look completely different. And this might throw off some newer traders who have yet to fully understand how this works, and that's why really I'm explaining this in the video. So we have the base pair as the US dollar versus the Canadian dollar. So if you were to buy this Forex pair, what you would have is you would be anticipating a price increase for the US dollar, and you would be buying the US dollar and selling the Canadian dollar. Okay, now what's interesting is the corresponding futures symbol is going to be completely inverse. When the US dollar is the base pair, the futures symbol is inverse on the chart. Now what is here, you can see this is a incredible move higher. The opposite will happen in the futures contract, which is where the Canadian dollar is the actual base pair in the futures contract. So the futures contract for all currency pairs that are USD as the base, so USD quoted first, will trade inverse to the futures contract. So this is an example of the USD CAD. You can see it's obviously moving higher while its corresponding futures contract is moving lower. I'm going to show you guys two more pairs that this follows. We have the USD CHF. Let me go to an hourly chart where the dollar is the base pair and the CHF is the Swiss franc. So the Swiss franc is getting weaker relative to the dollar, but the dollar is the base pair. So we have a USD CHF rally here with the 6S, which is the corresponding futures contract for the USD CHF, is clearly moving lower here. So these are the exact same currency pairs, but they are inverse because USD is the base. And then the final major pair I'm going to go over here is the USD JPY. I'm going to move to an actually these are both daily charts. Let me just go to an hourly chart. It's a little easier to see. But the 6J is the inverse to the USD JPY. As the USD JPY rises, the 6J will fall. Once again, another inverse pair or inverse Forex contract relative because the USD is the base pair. Okay, but that's going to wrap up this video. If you enjoyed this content, please give this video a thumbs up. Feel free to leave a comment in this video below. Share it with anybody who you think might find it helpful. And make sure to subscribe to my YouTube channel for more informative videos. Everybody take care and have a great day.